Hi there, this is Dawn Strong, and this is shit they don't teach you in high school. What we're going to talk about today is term insurance versus mortgage insurance. And I know, don't turn off your computer. I know people hear insurance and they want to run for the hills. But this is something that you need to hear. I'll save you some money. For those of you that own your own home, you walk into the bank or whatever financial institution where you got your mortgage and they say, well, if one of you dies, do you want this mortgage to be taken care of? And you go, well, of course I do. I'm not an idiot. I love my family. That's why I buy insurance. So you get the mortgage insurance, and it's usually rolled into your mortgage, and you don't even see it. You don't even think about it. All you think about is, my family's safe in case I kick the bucket. The thing that you don't understand is that that's in place to protect the lender. You die, the bank gets the money. Your wife or your husband doesn't have a mortgage to pay, but do they have anything else? No. Can they keep up with the bills? No, perhaps not. Maybe they'll have to sell the house and move elsewhere. That could happen too. The other thing with mortgage insurance is in every insurance process, they do what's called underwriting. Basically, a nurse comes over, they ask you a couple questions to make sure you're not dying when they give you the insurance. With mortgage insurance, this underwriting process isn't done until you're laying on a cold slab. I know you don't like to talk about it. It's going to happen. Insurance company comes in, they cut you apart, I don't know, saw your head. Ugh, it's awful. God forbid you might have had a cold, you might have cancer, but got hit by a bus. They may not cover your mortgage insurance if they find bad results in your autopsy. With term insurance, the underwriting is done at the beginning, so you know if you're covered or not. If you're covered, you go ahead. If you can't be covered, they let you know. So therefore, underwriting after, bad. Underwriting before, good. The last thing that's the real kick in the teeth that no one ever thinks about is when you get mortgage insurance. Every time you renew your mortgage, you get older, right? We all get older. As you get older, your probability of dying becomes greater. So therefore, your premiums, which is the amount that you pay to have mortgage insurance, go up. The funny thing is you've been really diligent and you've been paying your mortgage down. So you're paying more to get less covered. Doesn't make sense. With term insurance, you can set it up so for a certain term, you're paying X amount of dollars evenly throughout the course of that term. Renew your mortgage all you want. It's not tied in to term insurance. Term insurance will go to your family in the case of your death. Those are the differences between mortgage insurance and term insurance. To have it better explained, and I don't know, CBC has been doing this a lot longer than I have, so their presentations are a little bit better. Go to YouTube and search for CBC Marketplace in Denial. Has a half-an-hour special all about mortgage versus term, and it's all Canadians, and it names like big lenders that have reneged on their mortgage insurance contracts. Make sure your butt's covered. Make sure your family's butt's covered, and get this taken care of today. Protect your family, not your lender. I'll see you next time.